Let's get the bigger picture. Eddie Gabor is here, owner of Key Advisors Wealth Management. Thank you for being here. How are you feeling about the market, particularly on a day where it's risk off? You see a lot of selling happening and people are running to the safe havens. What do you think?
I don't think this is any different than the volatility we've seen so far in 2025. This is going to be the story for this year. So I think really on a day like today, there have been a lot of people very bearish this month that have not participated in this market. This gives them a second chance to get into some of these names that have sold off from their highs. We're still not that far off from the all-time high. So to me, today is just a buying opportunity for those that have missed the run so far this year, because I think the setup for March and April is going to be pretty good.
Right, understood. I know you have a few names that you own and sectors that you own because there are certain themes that seem to be working, right?
That's exactly right. And one of our main theses going into March as to why we think it's going to be a pretty strong market for the riskier assets is I think when we get this inflation data that we're going to get for the month of February that'll be reported in March is going to show a moderation in inflation. I don't think that trend will last all year, but the market will react to that news that's just for this month. And I think that's going to be very positive because that's going to put rate cuts back on the table in the bond market. It's going to keep the 10-year under 4.7. And because so many people are bearish, they're going to be forced, in my opinion, to buy. And I think you're going to see names like Nvidia and Meta and Amazon and those types of discretionary names that are also getting beat up today could go significantly higher and catch a bid. We put cash to work again today, and we're now pretty much fully invested for the most part. We have moves that we can make if we get more surprises post Nvidia earnings. But February is the buy the dip month to set yourself up for a strong March and April.
You think Nvidia earnings are going to help the market, hurt the market, or be some sort of moment in time?
So we told our clients today, we sent out a video to clients today and said, we have no idea how that market's going to react to Nvidia. We know it's going to move it in a big way, one way or another, but it'll be a 1 or 2 day event. Our thesis on Nvidia is if we think the S&P is going to go to 63 or maybe 6,500 in the coming months, which is what we think will happen, that name is such a big percentage of the overall indexes. It's really hard mathematically to think of a market that's going to go to highs and not take the most important name with it. So we could see revenue growth slow. To me and Nvidia, the biggest thing is going to be on the earnings call. They're going to have to answer the deep seek question. And if they knock it out of the park, you could see that name go ahead and take off and go ahead and finally break that 150 barrier that seems to be a resistance level for that stock.
Right. I mean, when you think about the other Mag 7 names, I know you were also looking at Amazon, right? For example, you like that name.
We do. We like Amazon and we like Meta. So Nvidia, Amazon, Meta are the top 3 names that we're buying right now, the Mag 7. Amazon is at a pretty good price point right now. I didn't think it would get to this point this fast, so we were glad we bought some of that today. And Meta, I mean, Meta is one of the companies that have actually monetized AI. They've got over 1 billion viewers on their social media. I mean, they dominate that space. And it wasn't too long ago that stock was at 740, and now it's taking a breather back down under 700. So under 700 and today's price point, we're comfortable with that risk reward. Again, I think the setup is really good for the next couple of months. So we are buyers today.
Yeah, I mean, today on a buy on the dip mentality, right? And before I get to financials, you were looking at the XLY. You thought this was a good way to get some more exposure to some of these names, right?
Yeah, so XLY, that's really a trade on Amazon and Tesla. Those are it covers a big percentage of that ETF. So for investors that aren't comfortable or have the risk tolerance for individual stocks, ETFs are a great way to play it. We play it both. We have the XLY in our ETF strategies that are tactical and shorter term in nature, and we also own Amazon and Tesla and some of our other holdings.
Right, understood. So JP Morgan financials, you do like that group. What's going to drive financials higher?
So the driver behind financial is going to be a couple of things, and we did buy more JP Morgan yesterday. I think it was down about 4.5%. So for some clients, we bought that. XLF is about a 6% position in our tactical ETF strategy. And financials, because we think this economy is going to stay resilient, and we're going to get deregulation under this new administration, that's a pretty good thing for financials. And financials have been one of the best places to be on a year-to-date basis. And it's very hard to find a bear market where financials are doing well. So we do see some real risks in this market, but we don't think they're going to materialize until the summer and the second half of this year. In the meantime, I think there is a lot of runway to the upside when you look at how people are bared up going into a month that I think is going to surprise on inflation. It's going to keep the VIX again under 20 and keep that 10-year in a really sweet spot.
All right, the VIX right now at 18. Eddie Gabor, owner of Key Advisors Wealth Management. Thank you, Eddie. Great to see you.